Good afternoon, everyone. This is Henry, and as we get into tonight's video newsletter, I wanted to cover what I believe is one of the most important charts in the market right now, and this is a daily chart of the VIX. I enjoy watching the VIX on a daily time frame just because it's one of the most basic swing approaches that I think you can take to anything. I think it works really well for this Bollinger Band Keltner channel analysis, and I think it's worth making note of the current daily squeeze. So you may be familiar with these video newsletters and how I'm usually looking at the squeeze because it tends to help drive directional movement for equities. Now the VIX is a little different in the fact that the VIX is not going to tend to trend like a really strong tech product might. Volatility is almost always going to revert to the mean, but in the times that it's not reverting to the mean, it can have these spurts of volatility, and the squeeze does a good job of marking these, right? So if we look back at the squeeze that occurred here in November, you'll see what I'm currently comparing to. I'm just looking to a similar signal and saying from there the VIX went from 18 up into 27. So if we take that and think about it as a measured move, or just say the last time a squeeze fired long, this was the point advance you had. And if you take that thinking and compare it to the low that occurred at 1527, well, that's how you start looking at 27. So again, that's just a few levels I want you to have in mind. I think that could be a target. And I think if you get up there, well, then the market just has a way of enjoying to best itself, right? Of coming up and testing old swing highs. So I want you to look at 28.27, the 28.99, and then potentially up into 30. So again, this may not come to fruition, quite this drastically. I think anything that stays above the mean, you want to continue to consider it, but think about that first decision, 22.5, the symmetry that we've covered, for reasons in here, and then again, finally, a potential culmination into 30. So watching that there in the VIX market, and then also bringing you some analysis over here in Tesla, because Tesla gave us some important information last Thursday, right? Then when they reported earnings and the conclusion of two of the models that had really been a founding piece of that company, I think it's kind of telling us a story. And I think it's also telling us, okay, if you are retooling for robots, that's going to take some time. At the end of all of that, my opinion doesn't necessarily matter. I want you to be able to keep it as simple as, and two things. One, letting you know where I would consider myself wrong, and then, giving you a trading plan that says if you never hear from me again, how might you monitor this idea? Well, I believe that the declining 21 EMA is telling us what Tesla wants to do right now, and it's in for a little bit more selling down into 350 is an extension that I'm keeping an eye on. The fire line, which is part of the Voodoo study set that I like to look at, is here at 360. So as long as we stay below that declining moving average and the VIX remains in this position where something, bearish could happen to the markets, I at least want to make you aware of this, and we'll update it, as it unfolds. So again, I hope it helps. Have a great rest of your night, and I hope to see you in the chat room tomorrow. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful, and if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.